in Shanghai. The Shanghai Composite smashes past 4,600 4 months ahead of prediction. Burned by Blackstone, Beijing puts its money back in the bank. And Chinese IPOs in Japan. Thank you. At the beginning of May, my careful analysis of the Shanghai Composite Index led me to believe the index was headed for 4,600 by 2008. I should remember to always run with the bulls when it comes to China, as my forecast proved modest and has already been bested by the gung-ho performance of Shanghai stocks over the past few days. The Shanghai Composite Index smashed through the 4,600 barrier for the first time Monday to close August 6 at 4,628.108. Yet another new record high. The CSI 300 index also set a record and closed at 4,703.98, and nearly shares moved up in Shanghai and Shenzhen across the board. Leading the advances were old line industries such as steel and metals. Shares of Baoshan Steel, China's biggest steel maker, rose over 6%. Wuhan Iron and Steel was up over 8%, and Manshan Iron and Steel was up 10%, the maximum daily gain allowed on Chinese exchanges. The China Iron and Steel Association credits its good performance on a 35% rise in sales and a doubling of profit across the industry. Obviously, Chinese steelmakers continue to benefit from the construction boom in nearly all Chinese cities, which is poised to continue as long as the Chinese population transitions from rural to urban, a process that could take decades. Metal shares were up sharply too, capping at their 10% daily limits, where Chalco, or Aluminum Corporation of China, traded on the New York Stock Exchange as ACH, and Jiangxi Copper Company and ADR traded on the pink sheets as JIXAY.PK. Only Shanghai B shares are underperforming and actually slipped slightly on Monday to close at 323.585, reportedly due to profit taking primarily in property stocks. In the wake of a 20% drop in share value, the decision by state-controlled China Development Bank to invest almost $10 billion in the American private equity firm, the Blackstone Group, has been derided by the Chinese public and questioned by some Chinese newspapers. Financial and economic newspapers and journals are the only place where you will find criticism of the government in the media and the expression of limited press freedom. Although not directly related to its probably temporary losses in Blackstone, China Development Bank will receive a cash infusion of up to $20 billion in the latest state-directed investment of China's gigantic foreign exchange reserves. This move may also be to recapitalize the bank after its initial investment in Barclays, discussed in an earlier episode. One of China's biggest but troubled state lenders, the Agricultural Bank of China, will receive the biggest infusion of $40 billion to recapitalize and prepare the last of China's former Big Five state banks for an IPO in the future. Even that huge sum will not address the Agricultural Bank's non-performing loans totaling well over 20%. China successfully recapitalized its big state-owned banks in the past, and overall this strategy is a good investment as it fixes one of the older structural problems in China's economy, the legacy of bad debt from the days of the Iron Rice Bowl. Like Japan and the United States in the late 80s and early 90s, China looks poised to fix its broken banks and restore health to its rapidly expanding financial sector. But the Blackstone experience did not put the brakes on equity investment. On the contrary, as the deal to buy into Barclays continues to unfold, Wall Street titan the Bear Stearns Companies is trying to sell part of itself or even form a joint venture with Beijing investment arm China CITIC Group. Bear Stearns is reeling from losses in American mortgage-backed securities, and co-head Warren Spector has resigned. One wonders how certain members of Congress will view a Wall Street beggar to Beijing. Last year, a delegation from the Tokyo Stock Exchange visited China and was surprised to find financial markets not years behind Japan as they expected, but actually outpacing the more mature but more depressed Japanese exchanges. Since that time, Chinese companies have been courted in an attempt to siphon off some overseas listings from rivals Hong Kong, New York, and London. So far, though, Tokyo has not caught on as the IPO destination for fast-moving Chinese firms. Earlier this year, Shenhua Finance's Asia Media Company did IPO on Tokyo, but has disappointed since. The anticipated IPO of 9U International Limited, a Chinese online game provider, was postponed last month as it may not be able to provide one of its most popular games, Audition, which is owned by T3 Entertainment of South Korea, and T3 says it won't renew 9U's license. The decision is now up to the courts. 9U was to be the first Chinese company on Osaka's Hercules Exchange, the successor to the lackluster Japan Nasdaq market, and expected to raise $154 million US. One IPO that is moving forward in Japan is China Bochi Environmental Solutions Technology, which is attracting interest as an environment play on the Tokyo Stock Exchange. The company makes water treatment and desulfurization equipment. Bochi is looking to sell around 80,000 shares priced in the 140 to 160,000 yen range. I'll see you next time.